SpaceX just filed for one of the biggest IPOs ever in April, targeting a valuation of $2 trillion and raising up to $75 billion. This funding is expected to support Starship production, AI infrastructure, and the continued expansion of Starlink. For investors like you and I, timing is crucial because an IPO of this size doesn't just make headlines. It could pull liquidity out of the broader market, creating ripple effects across equities. That said, the SpaceX IPO is a double-edged sword. At a $2 trillion valuation, you're looking at a price-to-sales ratio north of 100x. That's an extreme premium, which makes buying at the IPO inherently risky. Which brings us to the main point of today's video. By understanding the ecosystem around SpaceX, we can position ourselves to capture upside before the IPO. Make sure you stay till the end, because I'll be sharing 3 specific opportunities you can invest in before SpaceX goes public in June. My name is Phoebe, and you're watching Trading Key. The SpaceX financial breakdown. To understand why the market is willing to pay such a premium, we'll need to look at the core engines of the business. SpaceX has effectively built a closed-loop cash flow machine. First, there's Starlink. What started as a niche satellite internet service has evolved into a global telecom powerhouse, serving airlines, maritime fleets, and even defense contracts. In 2025, Starlink is estimated to have generated around $11.4 billion in revenue, growing roughly 50% year over year, with EBITDA margins estimated at 63%. Second, we have the launch business, powered by Falcon 9 and the growing role of Starship. This is essentially the logistics backbone of the space economy. By perfecting reusable rockets, SpaceX has driven the cost of reaching orbit to historic lows. Institutional estimates suggest launch revenue of roughly $4.1 billion in 2025, with margins near 33%. Together, these two segments give SpaceX something extremely rare, a dominant position in both space infrastructure and access to orbit. And that's ultimately what underpins the narrative behind a potential $2 trillion valuation. Best stocks to buy before SpaceX IPO. Instead of chasing SpaceX at the IPO, let's take a step back and look at the broader ecosystem around the company. We'll start with the supply chain, but there's a catch. SpaceX is reportedly around 80% vertically integrated, meaning it builds most components in-house. Even when it sources from companies like Honeywell or NVIDIA, those contracts likely represent only a very small portion of their overall revenue, so the traditional supplier play doesn't really work here. Instead, the real opportunities lie with customers and shareholders. That brings us to our first stock, Intuitive Machines, ticker LUNR. The company provides lunar landing and data services for clients like NASA, and it relies heavily on commercial launch providers like SpaceX. Here's the idea. As SpaceX scales, launch costs decline. For a company like LUNR, where missions can exceed $100 million, a 20% reduction in launch costs could translate into tens of millions in savings. If the company is approaching break-even in 2026, those savings flow directly to the bottom line, potentially driving a meaningful valuation re-rating. The second stock is EchoStar, ticker SATS. Investing in shareholders is one of the more direct ways to gain pre-IPO exposure. Through strategic positioning, EchoStar has gained exposure to SpaceX equity. If SpaceX eventually lists at a significantly higher valuation, that stake could see substantial upside. Looking at SATS today, if you break down its balance sheet, factoring in its SpaceX exposure, cash, and debt, you can make the case that its underlying asset value may exceed its current market cap. In simple terms, the market may be undervaluing its SpaceX exposure. However, this is a time-sensitive arbitrage. Once SpaceX goes public, that gap could close quickly. The third stock is Rocket Lab, ticker RKLB, a direct competitor in the launch market. Today, it trades at only a small fraction of SpaceX's implied valuation. If SpaceX sets a multi-trillion-dollar benchmark for the sector, it effectively raises the valuation ceiling for the entire industry. That matters because institutional capital, especially ETFs, will need liquid alternatives for space exposure, and RKLB is one of the few pure-play options available. Even if Rocket Lab doesn't match SpaceX operationally, a sector-wide re-rating alone could drive meaningful upside. SpaceX investment strategy recap. So the strategy here isn't to chase the hype on SpaceX's IPO day. It's to position early across the ecosystem, with LUNR as the customer, benefiting from margin expansion as launch costs fall. SATS as the shareholder, offering indirect pre-IPO exposure, and RKLB as the competitor, positioned for sector-wide valuation upside. The goal is simple: find the gaps where the market hasn't fully priced in a potential $2 trillion SpaceX. Now I want to hear from you. Out of these three plays, which one has the best risk-reward? Drop your thoughts in the comments. Thanks for joining me today. If you found this video helpful, remember to subscribe to Trading Key, give this video a like, and share it with a friend who might just benefit from learning this too. With that, I'll see you in the next one.